And as always, we're going to be looking for accurate content, good risk management, and always exercise patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Tuesday, May the 10th. I'm John Hoagland. Thanks for trusting me with your time. We're going to be seeking accurate context, thinking about risk management, and always being patient in our trading. We've got a little good vibrations going on here. Hopefully we're going to be able to sense the good vibrations coming from the markets today. As usual, thinking about economic information. First here, we don't have any major economic numbers due out. However, there is a large number, at least 5 talking Feds speaking throughout the day today. We've got 2 that are, one that's already spoken, one that's scheduled to speak about 8 a.m. Central Time, 7 a.m. Central Time, I guess. And then we got 3 starting after noon and continuing throughout the day. So a lot of the focus is going to be on those Fed speakers today. Not to mention, we do have a huge number of not very notable, but this morning we did have Sony, Bayer, Cisco, Hyatt, Peloton, and Fox. We also had, we're waiting for Occidental Petroleum after the close. And like I said, most of these probably not very impactful unless they attack us in groups. Crude price is set to continue the slide to the downside on slowing demand in China. As always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here. We do ask that you join our YouTube page, subscribe to the YouTube page, and get notifications when we do go live. A look this morning at the VIX down 4.5%, down at 33.18, still holding above that 30 level. The dollar index up slightly, 103.70, and the yield on the 10-year back down below 3, down at 2.98% the last time I checked. Just say good morning to everybody and remind you, today is Make Hoag Money. I think you guys bring some good trade ideas. I think we've got a challenge ahead of us this morning, as we always do. Let's say good morning to everyone. Top of my list, here's Kevin Guy. You win the prize, Kevin. Shaw, chilling with Dylan. My brother Rick. Tacky on, my other brother Daryl. My other brother Tom. Love you both. It's so good to see family here. It kind of reminds me of when I was in a rock band and we'd play out somewhere, and it was pretty much family that came out to see us. And you're still out here doing it and supporting, so thank you. And again, I love you very much. Charles, good morning. Dan Trader, Theo, Terry James, J Trades, Brian, Bill Phillips, good morning. Scott Saw, and he conquered. Kirill, Rusty Golfer, that is my name too. Vince, good morning. Devon, Trading Research, Manuel Caesar, Kevin Laffey, it's good to see you as always. Sarah Hall, good morning, and prayers and love to you as well. Keith, good morning. Charles March, good vibrations, yes, Charles. Anne Marie, we played your song this morning. If you're just getting in here, Anne Marie, we've had a little good vibrations for us to get started this morning. Fetchy, that's a new name I haven't seen before. It's good to see you. We got a little spam coming in here. I'm going to remove that. I don't know how they get in here. I don't know if it's like a machine or something, but It's really annoying, and I wish you'd stop if you're actually a person. All right, so where are we? Stephen C., Nico, good to see you. James Harris, Toadman, Extro, good to see you. I know the feeling, right? James, good morning. Rob Crust, good morning. Devont, and whoever is spamming us, please stop. But they want me. Yes, they all do. Naked shorts. Oh my goodness, you guys are funny. You guys are on your game today. Bring that game to make Hogue money this morning. Bots, yeah, I hate that. I can remove what they put in, but I can't remove them from the. I can block them, I think, but I don't know if that's going to do any good. I can put them in timeout. How's that? All right. Here's the link again for Make Hogue Money. Looking forward to seeing you there. We've got some good time here, really. So we're gonna jump into the charts in just a hot second and see what we've got looking at us this morning. We got some conflicting information, I think, in our equities. A couple of late spikes being rejected. One late spike seems to be accepted. We're going to see that in the charts right away here. So let's jump in. All right. I think everything's in order here. This is the daily in the S&Ps. As always, we like to start with the longer time frame. And so this is the daily chart. We've got some downside structure that remains. Lower highs, lower lows, just breaking out of an area of balance we've been in for a couple of weeks yesterday. We brought in okay volume in futures, but there was some pretty strong volume in the New York Stock Exchange yesterday. And we added another 55,000 in open interest to the downside yesterday. That means one of two things. We're either getting too short or we've attracted sellers, the market kind of giving us an opportunity perhaps today to trade back to the weekly kickoff low, which may be very resistant, especially when we have an old trend line coming across that level and convergence of those two. Those tend to be days where we may see some decent movement away from that convergence. Downside continuation, but I think there's a lot of cognitive dissonance in this market today. Take a look at this. Okay. So here's our move to the downside yesterday. We were talking in group coaching about delta. I see Tachyon talking about cumulative delta. Look at the delta yesterday. We had just continually higher delta on a move to the downside. That tells me that we attracted some degree, some time frame of sellers that's bigger than us. And they were sellers throughout the day yesterday. That's when we end up putting in the late spikes at the end of the day, when the short time frame traders, who are the ones creating the positive delta, get too long and end up getting out at the end of the session, which is pretty much exactly what happened yesterday. Now we've got a situation where we are rejecting the late spike just for giggles here. The base of the late spike is right here, 39.95 quarter, 39.95 quarter, basically the low of this bar. When the market breaks out of previous balance and drives and closes in that creates the late spike. We are rejecting lower pricing right now. So I think that gives us a pretty decent opportunity, and it looks like it's going to be giving us an opportunity in Make Hogue Money to take a look at 40.48 weekly kickoff low. It's value high from yesterday. It's pretty close to the low of the range from last week. So this looks like an area where we might be able to find some fish. So get your game on and let's make some money for me today. What do we have? Well, we've got maybe some overnight inventory to the long side, which would be good if we're going to be coming up against some sort of rejection, because we're going to be holding longs. And if we don't continue above that level, those longs may be the ones that start the fire back to the downside, if that is indeed what's going on. We've been adding positive delta all night long, as well as Tachyon has pointed out. Well, we're going to see what this means. Again, we'll be together for the open, and you guys are going to bring your A game and make me some money today. Overnight inventory, it was a little bit iffy until recently. We've seen this market increase or raise prices, raise the overnight high. And again, this area up here, I bet you there's some fish up here. We're going to find it. But again, there's a little cognitive dissonance. We've got the overall picture to the downside. We've got a late spike that's being rejected after adding a whole bunch of open interest to the downside yesterday and positive delta. So we've got everything lined up for this market to continue lower. My question is, have we gotten too short? If we've gotten too short, we're gonna alleviate some of those shorts before finding the opportunity to bring this market back to the downside. We're getting pretty close to that weekly kickoff low. We're gonna see if we can find some fish there. Hopefully, the fish won't swim away before we get there. Here's crude oil. Crude oil is in rollover. Pretty good reversal pattern yesterday. On fundamental information, we lost 3,400 estimated open interest. That seems to make sense. We'd started to maybe get a little bit long, and we couldn't bring in new buyers, so sellers came in and moved price back into balance, back to weekly kickoff low. That's an interesting spot for us. Back inside previous balance. Take a look at the 30-minute chart here. Not really holding any overnight inventory. I mean, the market kind of opened here and is trading there. So overnight inventory is largely kind of reconciled already. We've got, a pretty big downside move yesterday, losing 3,400 in open interest. And again, because we are in rollover, it becomes very difficult to estimate what's going on as far as new business versus old business in the front month, because the front month is going to be reducing. So I'm collecting all of the information about open interest all the time, especially during rollover, because we can't see. We know that the June contract is going to be expiring, and it's going to be losing open interest to future months, as well as outright exiting the marketplace. So the open interest and volume information becomes blurry during rollover, and rollover is scheduled for a week from today in crude oil. So we've got a whole week of being kind of unable to count on some of the tools that we look at, and that's the open interest and volume. So we've got no gap. We're opening in range, in value, back above an area that we closed above yesterday. 103.09 is settlement, so we couldn't close below that level. We've tested 2 times down below that level. We are showing signs of rejection of lower pricing and acceptance of previous value. So I kind of got to stay a little bit patient in this market, and we're going to be opening here in 1 minute. So I'm going to pander here until we get to that opening range, and we'll see if there's an opportunity, but I'm not in a big hurry to jump on it. Because why? Because we're in range, we're in value. There's very little change in the perception of value of a barrel of crude oil. I mean, we're opening at settlement, we're opening in balance, we're opening in range. Patience usually pays in this regard, because we're going to be able to find better trade locations as the day goes on. Let's put up the 1 minute here and see if our opening range works for us. And they're off. More than 30 ticks. opening tick very high in the opening range. If we can't hold below 103, I'm going to agree with Dan with the idea that we may hold that level and push prices higher into value from yesterday. We've got 36 tick opening range so far. I'm not going to be jumping in on anything here. Let's move along so we can be prepared and ready for make home money. Here's the Nasdaq, which reads almost exactly the same as the S&Ps. They are very similar and yet different. Nasdaq, big jump in open interest, added 10,000 on the push to the downside yesterday. Volume was pretty good in the Nasdaq. How do I get off this bot list? This is crazy. Anyways, it's kind of distracting. Downside structure remains, continuation to the downside intact. We've got to stay below weekly kickoff low here, which is 12,610. And again, we do have that same kind of conflicting information. If I were to go through the nuances alone, all right, I would think that the longer time frame is eventually going to win and we're going to push price lower. The nuance that we are leaving a late spike behind, we're rejecting the late spike. We're even above value here now in the Nasdaq, making a move up towards last week's low and weekly kickoff level here, 12,610. There's fish here. Where they are, what direction, what side of the boat they're on, we're going to see if we can figure that out. Again, short time frame rejection of lower pricing, longer time frame structure to the downside intact. I'm still probably going to be thinking about looking for opportunities to sell strength in this market, but you got to be careful. Gold. Wrestling still with weekly kickoff low. 1849. 1848, I think, is 1849 weekly kickoff low. So relative close to it yesterday, relatively close to it last night. We added 2,600 in open interest on this push to the downside. Again, my question for everybody in this is, what is the market attempting to do? It's attempting to go lower. How good of a job is it doing at this point? I would say not that well. We added 2,600 in open interest to the short side without being able to put in a new low or take out this important inflection level of the weekly kickoff low. So I'm starting to believe that we may be a little bit too short to continue to break. It's kind of telling us that here this morning on the 30-minute chart. Look where we are. We have found solace inside the area of value from yesterday. We looked lower. Do we have any overnight inventory? Maybe if we do, I'd have to say it's a little bit to the long side. But again, very little change in the value of an ounce of gold. So try and stay patient. I'm not in any big hurry in this market. I'm going to be looking for opportunities down near weekly kickoff low, looking for opportunities if the market comes up and starts to kind of try and close this gap, which could lead us up to this point of control up here, which I'm going to change this to a point of control versus a settlement price. So we've got visuals on both sides. So I got to try and stay patient and see if I can get the opportunity near one of those important levels. The euro, wow, look at this thing. Can anybody say range bound? We added 4,000 in open interest on yesterday. Volume was pretty feeble yesterday, but open interest has been growing, which leads me to believe we may be coming into a period where short time frame control may fall by the wayside for longer time frame traders. But we've got to be patient. We've got to do what we do, and that's the range bound rules is we fade extremes and ranges until there's until there's acceptance outside of the range bound activity, and we go with accepted breakouts outside balance, and we're basically right in the middle of that balance. Look at this 30-minute chart. This thing just really tells the story. Range, check the high of this gap, range, inside, no overnight inventory, inside range, inside value. Again, I'm going to stay patient, and I'm getting very impatient with my spammer here. This is I'm going to have to report this. Jesus. 10-year. I do apologize about this, folks. This is going to have to do something about this. Nobody needs to be thinking about the spam at this point in the day. Oh my goodness, it's very upsetting. The 10-year, we're still seeing an uptick in we had an uptick in volume yesterday. Added 27,000 in open interest on potential new buying coming in. Could we be putting in the low here for a while? We know rates are going higher, but are they really in the market? But downside structure is still intact, I believe, until we find some sort of acceptance above weekly kickoff high. That's what these weekly kickoff levels are really about, is areas where I'm looking for opportunities and sensing or kind of feeling if longer time frame traders are responding at those levels, because those are levels that I calculate using a number of different things, where I believe longer time frame traders will really kind of be forced to adjust inventories. And if we can find them, then we get a pretty good story and a pretty good hypothesis for what to do about it. Here's the 30-minute chart. So pretty decent open interest, lower volume on this push up, but we've opened with a gap. And if we open with a gap and can't close the gap relatively early, we trade in the direction of the gap until there's some sort of structure we can lean on, which we may be kind of getting to. We've got last week's high, which was resistant last week. See if it's still resistant for us today. At the very least, it gives us the opportunity to limit the risk. Take a look at where you think the market is telling you you're wrong. Put your stop in first, and then look for your entry as close to that stop level as you can get. Reduce risk at all costs. Do not forsake trade location for momentum. Let's take a look at the nasty nat gas. See if it brings a haymaker again for those that are trading it. Looking like we were a little too long at the highs here, and we've got 2 weeks before the roll date. So we're starting to come into rollover in that gas as well, a little bit further out than crude oil, but still something we've got to keep an eye on. So volume very strong on this push to the downside, and we lost 3,200. So that's what tells me we got a little ahead of ourselves up at the highs here. We got a little too long, and we've got some traders just trying to bail out. Yesterday it was 82 degrees here in Chicago. We put on our air conditioning, so it looks like our need for nat gas in the northern hemisphere is ceasing or slowing. So here we go. Take a look at the 30. So over the last couple of days, we've checked a whole bunch of unfinished business, naked points of control lower. We've just kind of looked at and then barreled right through the weekly kickoff low yesterday, and it's created a late spike. So that gives us another opportunity. And that late spike basically begins at the weekly kickoff low. Weekly kickoff low was 726. 723 is where the late spike started. So we're opening below the late spike. We're opening with a gap. We're going to be, unless we can close this gap and find acceptance back inside value from yesterday, which includes going up to the late spike and rejecting it to the high of the late spike, again, that 723. So it's going to be tricky up here, if even given the opportunity to look for an execution. Although there's lots of confluence here. We've got the base of the late spike. We've got last week's low. We've got weekly kickoff low. We got all kinds of important information to look at here. And if we do manage to get there, I would suffice to say that we might find some fish up there. At least, a couple of largemouth bass, if not a walleye, we could find up there. If we can't close that gap, well, then we start to look for opportunities to trade in the direction of the gap. Such some basic rules. I wish it was that easy, because it's not. All right. So we've had the opportunity it looks like we've got the opening range trade. The opening range high remains the high in crude oil. And crude oil has been in trouble lately. So we're going to see what we've got as the day goes on there. We are holding below weekly kickoff. We're $1 below it now. We've got 100 ticks, almost 100 ticks if we took that. So when I say I'm not going to take a opening range trade, you should probably take it, because like we say, the market always seems to make a liar out of me. Well, weekly kickoff low in ES, 40.48. 40.48. Basically, we're there. And before the open. So it looks like that's going to be something that we're going to be contending with and make Hogue money. Looking forward to it. What do you want to see if you think a squeeze shows up? Well, if we're talking S&Ps, the weekly kickoff low of 40.49 is in play right now. If we're going to see a squeeze to the way back up, I think it's going to accelerate upon acceptance of that of price above that 40.49. We were looking at last week's low, the high of value from yesterday, weekly kickoff low, which is an important inflection level for me from either level. Okay? And we're going to have a chance to watch this together, it looks like, if you're coming to Anne Marie, and I hope you do. I hope you all come for Make Hogue Money. I'll drop the link in there just in case, so you don't have to look for it. And so I'm going to get set up, and I will be in the room at 8:20. Let's take our deep breath. We've got to stay calm and calm, cool, collected, humble, grateful, creative, all of those buzzwords. And don't forget to say a prayer for world peace, and get out there and profit today. There's some good opportunities here. We've got some levels that we're going to be watching, and we're looking forward to your success. So we'll see you in about 5 minutes. I'm going to get ready, and if I don't see you, God bless. Today is Tuesday, so we do have Coach's Playbook, and we will have the recap after the close. Maybe we'll have a little fun, and we'll see you soon.